Hey everyone, and welcome to Online Trading Hub. I'm Happy Kapor, and I'm excited to guide you through the world of trading. Today, we're tackling a fundamental question. What is trading? This video is specifically for beginners who might feel a bit lost or overwhelmed by all the jargon. Our goal is to break down the basics of trading in a way that's easy to understand. By the end of this video, you'll have a solid grasp of what trading is and how you can get started. So, let's dive in. At its core, trading is simply the act of buying and selling financial assets with the goal of making a profit. Think of it like this. You buy something at a low price and then sell it at a higher price. These financial assets can take many forms. The most common examples include stocks, bonds, currencies, and commodities like gold or oil. A key concept in trading is anticipating price movements. Traders try to predict whether the price of an asset will go up, which is called a bull market, or go down, which is called a bear market. Ultimately, a trader's goal is to accurately predict these price movements and capitalize on them to make money. It's all about buying low and selling high. Trading involves participating in a marketplace where buyers and sellers come together. To participate, you'll typically need to open a brokerage account with a financial institution. This brokerage account allows you to place orders to buy or sell assets. These orders are then sent to exchanges like the New York Stock Exchange, NYSE, or the NASDAQ. The price of an asset is determined by the forces of supply and demand. When there's high demand and limited supply, the price tends to go up. Conversely, when there's low demand and a large supply, the price tends to go down. Remember, the fundamental goal remains the same: buy low and sell high. It's important to understand that there are different types of trading strategies. Each strategy involves different time horizons and risk levels. Day trading involves buying and selling assets within the same day. Day traders aim to profit from small price fluctuations that occur throughout the day. Swing trading involves holding assets for a few days or weeks. Swing traders try to capture larger price swings than day traders. Long-term investing, on the other hand, involves holding assets for months or even years. Long-term investors focus on the long-term growth potential of an asset. Finally, scalping is a very short-term strategy that involves making small profits from very small price movements. Scalpers often hold positions for only a few seconds or minutes. To get started with trading, you'll need a few essential tools. First and foremost, you'll need a brokerage account. You'll also need access to real-time market data. This includes price quotes, charts, and news that can help you make informed trading decisions. Learning how to read charts, also known as technical analysis, is crucial. Charts can help you identify patterns and trends in price movements. Finally, you'll need a reliable internet connection and a device such as a computer or smartphone to access your brokerage account and market data. It's important to be aware of common mistakes that new traders often make. One of the biggest mistakes is emotional trading. Avoid letting fear and greed drive your decisions. Stick to your trading plan and don't make impulsive trades based on emotions. Another common mistake is a lack of research. Always understand the assets you're trading and the factors that can affect their prices. Overleveraging or borrowing money to trade can amplify both profits and losses. Be careful not to risk more than you can afford to lose. Finally, always practice proper risk management. Set stop-loss orders to limit your potential losses and diversify your portfolio to spread your risk. If you're ready to start trading, here are a few tips to help you get started on the right foot. Begin with a small amount of capital that you're comfortable losing. Consider opening a demo account with a brokerage. This allows you to practice trading with virtual money without risking any real capital. Commit to continuous learning. Read books, watch videos, and follow financial news to stay informed about the markets. Develop a clear trading plan that outlines your goals, strategies, and risk management rules. Stick to your plan and avoid making impulsive decisions. Finally, be patient. Trading takes time and practice to master. Don't get discouraged if you don't see results immediately. So, to recap, trading is the buying and selling of financial assets for profit. It involves participating in a marketplace, using a brokerage account, and understanding supply and demand. There are different types of trading strategies, each with its own time horizon and risk level. To succeed in trading, you'll need the right tools, a solid understanding of the markets, and a disciplined approach. Remember, trading is a journey that requires continuous learning and adaptation. Don't be afraid to make mistakes, but learn from them and keep improving. If you found this video helpful, please give it a thumbs up. It really helps us out. And if you want to see more videos about trading and investing, be sure to subscribe to Online Trading Hub. We're here to help you on your trading journey. Let us know in the comments below what other topics you'd like us to cover in future videos. We're always looking for new ideas. Thanks for watching, and happy trading!